All right, thanks for checking in with me again on this one. This is a unique one. We're going to do buying investment property using your current primary residence and reverse mortgage. My name is Charles Davis. Make sure you like and subscribe if you like what I'm doing. If you have any suggestions of things, scenarios you'd like me to run, let me know. I do specialize in being very detailed, show you numbers and honesty and transparency. So in this example, you say your current primary residence, you've lived in that home for 30 years, and it is worth $800,000. You do want to buy a second home as an investment property, however, and you have some options as far as getting the money out. What I'm going to show you is doing a reverse mortgage. So on your $800,000 home, you refinanced in 2020 or 2021, you have that sweet 2.75% interest rate. Loan balance is $288,000, and your current principal interest somewhere in their neighborhood of $1,173 a month. With a reverse mortgage, the way it works, it's a value multiplied, a multiplier based on your age or the age of the youngest borrower. In this example, we're going to use a borrower somewhere in the neighborhood of 68 years old, meaning their loan to value can go up to 48%. So $800,000 valuation on the home gives us a max loan amount of $384,000. We're going to pay off that $288,000 of the current first mortgage. That's going to give us around $96,000 to put as a down payment on our new investment property. That investment property, if we're going to buy it, it is at $400,000 as far as the purchase price. You're going to put down that $96,000, which is right around 24%. Loan balance of $304,000. Change the interest rate to be a little bit more accurate to where it is today. So your loan to value is 76%, interest rate 6 3/8. I'm going to put the monthly principal and interest payment of $1,887 on that new property, but that property can be rented for $2,500 a month. So if we do the reverse mortgage on this, there is no required monthly payment. That completely goes away because with reverse mortgages, you do not have to make a monthly payment unless you want to. Can, certainly able to, but you don't have to. So in this example, we're going to use that you're not going to be making a monthly payment on the new note. You're leveraging the money you pulled out to buy an investment property. And what's happened here, your total wealth has gone from $800,000 in just your primary to $1.2 million, adding that $400,000 investment property. Your initial principal and interest payment, which was on the 30-year fix you refinanced in 2020 or 2021, was $1,173. That's reflected right over there. Your new effective principal and interest rate is $613 less because you've gotten rid of this number completely with the reverse. You do not have to make a monthly payment, and you have cash flow pulling in from the rental versus the rental income versus the principal and interest payment against the property. So that is a net cash flow there. Subtracting this out, you're actually $613 ahead in that scenario, and your net principal and interest payment change is almost $2,000 a month. So you are saving, by doing this, almost $2,000 a month in payments or additional wealth into your family, because you're going to keep this money in your pocket, and you could take that additional $1,787 a month and invest it if you would like in something else, or just have it sitting around to use on the grandkids. So you can use this to buy an investment property. In this scenario, you could buy a second home with it. Obviously, you wouldn't have the rental potentially coming in. So if I just zero out the rental income, what you'll see is now I have buying a second home, a vacation home. Perhaps you want to have something down in Arizona or Florida, South Carolina. So in that case, you're going to do the same concept, but you're not going to have any rent coming in. So your net wealth's still gone up by $1.2 million. Your new monthly principal and interest rate is $1,173. I mean, your original was $1,173. The new one, reflecting just the on the new property, the amount you have to pay for the principal and interest on the mortgage on the new property is $1,887, as you see here, which means for an additional $713 a month, you now have two homes. Pretty good deal. And you've increased your wealth from $800,000 to $1.2 million, purchasing a $400,000 second home or investment property. Again, my name is Charles Davis. I do this type of math and breakdowns all the time. If there's something that you would like to see, certainly let me know. I'm happy to do it. Otherwise, please like and subscribe. Appreciate it. You have a good day.